Hello, this is Binnie here. Today, this piece of news caught my attention. A shares closed higher. But most importantly is that Chinex, which is an index that's in the Shenzhen Stock Exchange, that's where the tech stocks are listed, it surges 3% to 3-year high as trading volume exceeds 3 trillion yuan for second time in history. And I think the key word is trading volume exceed 3 trillion yuan for second time in history. This is a very, very important development because we've seen the Chinese stocks not doing well for this few years, but we've also seen that the indexes been raging higher. Now, if you want to know why is Chinex, you can refer to this video that I did before, just about a month ago, where I highlighted that Chinex had broke out of a base. Now, this article highlighted the reasons why it contributed to this huge surge in both price and both volume. Number one, as you can see in this article here, it said that the central bank support the market liquidity with a 600 billion yuan, that's about 82 billion USD, through a medium-term lending facility. Now, these medium-term lending facilities would inject liquidity into the market because it allows banks to borrow funds from the central bank as long as they have collateral. Now, number two, highlighted here is that Goldman Sachs believe there's capital inflow. I think that this capital inflow is very important because we've seen that funds, ever since the trade war with US, a lot of funds been moving out of China. But right now, it is reported that the hedge funds net purchase of Chinese stocks at the fastest pace in 7 weeks as the Shanghai Composite continue to hit decade highs. Now, it's very important because if we have injection of foreign funds into China, then it means that huge foreign funds could be seeing a huge interest with the Chinese market, especially with quite a market that has been moving down for a significant point of time. All right, and of course, the third point is external factor, which is the Fed chairman had a dovish stand on the rates of interest rate, meaning that rate cut is coming in September, and that led to the US stock increase. One thing I personally think that if there could be a rate cut, then it makes the US treasuries less attractive, and that also means that money will flow to the stock market. But if you take a look at US stocks, it's really at the high. So where would money flow? Money will want to flow to those stock markets that is right now still not at the high yet. That means market which have been quite depressed for the past few years, and one of them would be Hong Kong and as well as the Chinese index. So today in this video, I'm just going to quickly investigate into HSI, which is Hang Seng Index. If you look at my earlier video that I've attached here, it says that the Hang Seng Tech has shown a bullish reversal. So that was a video that I did already suggesting that the tech stocks of the Hong Kong market has already shown the bullish reversal. Then now is the Hang Seng Index also showing a bullish reversal as well. This is the Hang Seng Index here, which is a monthly chart. The reason why I especially show you the monthly chart is because I'm using this indicator that I've quoted myself. But basically that is to tell us whether the trend, which is this down trend here, have been fully broken. So the fact that if price can close above this level, which is 24,600, as of tech indicator, then this downtrend, which means that what we've seen from 2018 until 2025, this downtrend would have been fully broken as long as price can trade above 24,600, which is right now that we are seeing here. But most importantly, what I like to do is I like to investigate each monthly close. That means whether the current month has closed higher than the previous month. So for example, if we take a look at the June versus the May, then we know that June had a close higher than the high of the previous month. Okay, if we take a look at, for example, July here, then July had a close that's higher than the previous month. So each month the closing is significantly higher. So this not only represent, for example, an interest in the stock market, but monthly close is very important for institutional involvement. So for example, if we see that this month here, which is the month of August, and right now we are towards the end of the month, if it can close above the previous high, which is around here, and let me just measure the previous high for you. All right, so that's about 25,750. If we can close higher than 25,750 on the month close, then it means that Hang Seng Index had another bullish month close, which is essentially bullish for the index. So let's watch out whether there is a bullish month close here. Now let's take a look into the weekly chart, which is something that I always like to inspect. Week by week is still now in the early week, but as long as it can close above this recent high here, so this would be the recent high that we've seen Hang Seng been hovering here for the past 1, 2, 3, 4, 5, and then this is coming up to a 6 week. As long as it can close above this weekly high, which is around 25,750 again. Now this is essentially a good close, so I'll be looking for the close here. What do you think? Do you think whether price can close higher? Let me know, in terms of your opinion. But in any case, if you would like to take part in the short-term trading, then you might want to explore more into warrants, which is warrants.com.sg, or DLCs, that's daily leverage certificates. That would be from SocGen or from UBS DLCs. So these are the places which allows you to buy into the index, but not to own the index via ETF or stocks, but to take part in the short-term activity. Let me know whether you think that Hang Seng Index might be able to clear 25,750. Thanks a lot for watching, and I'll see you in my next video.